After last week's market turmoil, what's in store on the earnings front this week? Welcome to Market Insight. I'm Ludovica Brignola. McDonald's reported a surprise drop in quarterly global sales as the burger giant struggled to hold back budget-strapped customers. So far, earnings have been disappointing in the US, and Wall Street is gearing up for a busy week of tech earnings. So what does all of this tell us about the US consumer? Well, joining me now to talk about all this is Keith Gangl, Portfolio Manager at Gradient Investments. Thank you very much for being with us today. Right, we've just seen McDonald's missed second quarter earnings and revenue estimates, and it's now leaning on value meals to bring back customers. What does this tell us about the US consumer, Keith?
Yeah, the U.S. Low-end consumer is getting a little bit stretched here. Like you said, McDonald's reported this morning, they reported a number of $2.97. Street was expecting $3.07, so that was a miss. The revenues missed as well. And the big surprise, actually, same-store sales comps was actually negative. That's the first time it's been negative since 2020. But we think it's kind of a compelling opportunity to be buying it here. Stock's off 15%, trades at below 20 times multiple. So those long-term investors, we think it's an interesting data point to actually start buying McDonald's here. And you're right, the low-end consumer is getting a little bit stretched. We'll have to see what earnings bring the rest of this week.
And that's interesting. And about the US consumers, CocaCola seems to be one of your top picks. Why?
Yeah, it's a little more defensive, like you mentioned. As if the U.S. consumer does slow down, they need to buy staples, and Coca-Cola fits that bill. They actually reported last week, and they had a really good number. They had a 9% growth in both from price and mix. If you go back a year ago, Coke was beating, but it was all inflation-driven. And now they're actually starting to see some volumes pick back up again. So that's a good sign for Coke. Valuation's reasonable. That's a name we like, especially if the consumer is soft. They will still grab for the Coca-Cola.
Right. Wall Street is now gearing up for a very busy week of corporate earnings, especially in tech, the big tech reporting this week. I mean, overall earnings have been disappointing, but what do you expect on the tech front?
Yeah, the four big companies reporting this week, it will be certainly a big driver. We saw Alphabet or Google report last week, and that was kind of an inline, but investors really didn't like it. Stock sold off a little bit. But the other four big guys reporting this week, we have Apple, Microsoft, Meta. We expect good reports out of these companies. Now the question is, will they be good enough, right? These companies have been blowing away expectations, raising guidance. We think they can continue to do it, but we'll have to see how much of a raise they actually have and what the quarters actually present themselves as.
Right, there's some optimism there. And the recent cooling off of the tech trade that we've seen last week, especially has dragged the major market indices lower. But the catch-up of areas like small caps has actually been encouraging. I mean, you say they performed exceptionally well, right? So do you expect this rotation out of tech to continue then?
Yeah, we've seen a big rotation. If you look at the month of July, and the S&P 500 is about flat. Surprisingly, those mega cap names we just talked about, they're actually down. But what we're seeing is a rotation of small cap names. Small cap names for the month of July are up 10%. That's a pretty big move in 1 month to be up 10%. So we're seeing a violent move to small cap names. We think that can continue, but not at the pace it certainly has. But we'll see. This is going to be a big week for mega cap tech names report. They report good numbers. I think those stocks can bounce back, and we're seeing a rotation back into those names as well.
Right. And at this point, all eyes are on the FOMC meeting later this week. What's the key message that you're expecting from the meeting, and will they signal a September cut or not?
Yeah, the biggest thing is no one's expecting a cut this meeting this week, but they will signal a cut more than likely. The probability, actually, if you look at the numbers out there, at 100% of a cut in actually September. So, again, we're in the camp of maybe we'll see one, maybe two before year end. I think the street's getting a little bit more positive. They're actually looking for a 2 to 3 before year end. That's going to be pretty aggressive. Now, again, if the low-end consumers is slowing down, maybe that's a reason to cut. But we feel, the economy is still strong. Unemployment, or the GDP came last week at 2.8%. Expectations were for 1.9. So that's the acceleration. We have some mixed signals going on right now, though. Again, the low-end consumer is starting to struggle a little bit, but the overall economy is still moving forward.
Right. And this message coming from the FOMC meeting, what sort of impact do you think it will have on the bond market as a whole? And how interesting are bonds now as opposed to equities or other asset classes altogether?
Yeah, bonds are becoming interesting. If you look at the 10-year Treasury yield, that's kind of one of the benchmarks we look at here in the U.S. Started the year at 3.75. They peaked at around 4.7 early in the year, and now as of today, they're around 4.17. So they've been coming down, and that's the expectation that the Fed will be cutting and how aggressive they will be cutting. So we think this big move down from that 4.7 peak not too long ago to around 4.20. We think it can gradually go a little bit lower. And remember, when bond rates, interest rates go lower, bond prices go up. So we do think that if the Fed continues to or starts the initiation of cutting, that will be a little bit of a tailwind for the bond market.
Keith Gangl, Gradient Investments, thank you very much for your analysis and insights. And this is your Market Insight. You can watch more videos on Reuters.com.